One of the main reasons people endlessly struggle with money is a simple lack of financial knowledge. But don't beat yourself up, it's not really your fault. They don't teach you this stuff at school, and your parents probably don't know it either. Good news is you can quite quickly learn some of the basics, which we'll cover here. What we're going to show you is the basic foundation that can build and improve your financial education. Some of this might seem quite obvious, but that's not necessarily a bad thing. The first term we're going to cover is cash flow. You need to understand cash flow, and it's probably the easiest to work out. All you do is you add up all the money you receive in a month, income, and subtract all the money you spend, expenditure, and whatever is left is your cash flow. Quite simple. Understanding your cash flow is essential to taking control of your finances. If your cash flow is negative, then you need to take immediate action. You've got two simple options: increase your income or reduce your expenditure. In most cases, you can usually get faster results by reducing expenditure. But if you want long-term financial security, then you need to also work on increasing your income. In order to be in control of your finances, and not the other way around, it's essential to track and monitor all of your income and expenditure, and ideally, create a budget. When you understand what your financial position is each month, you can start to change it. It's true what they say: if you measure something, it improves. There are lots of ways you can track your finances, but you can't beat a well-designed spreadsheet. If you don't want to create your own, I've created an easy-to-use and attractive template. You can find the link to this in the description, along with the tutorial. Cash flow will be covered in more detail in another video. Okay, the next concept we're going to introduce is assets and liabilities. You probably know what these are, but you might not have thought about how they apply to your wealth. Wiktionary describes an asset as something of value, and a liability as an obligation, debt, or responsibility owed to someone. If you want to be financially successful, you need to understand how assets and liabilities play a powerful part in your wealth. Let's start with liabilities. A liability is essentially something that costs money, and or depreciates in value. They are very bad for your financial health, but we buy them all day long. We dream about them, we get envious of other people's, and we rarely stop to think about how they're affecting our long-term wealth. So what counts as a liability? Put simply, everything that isn't an asset is a liability. This includes your car, your credit card balance, any outstanding loans, your mortgage, your 15-inch telly, your new smartphone, that holiday you've booked, your gym membership, all your furniture, your clothes. The list is endless. All of these things take money out of your pocket and they don't put it back. Now, I'm not suggesting you treat this list as the enemy and suspend all your shopping trips, but before you buy something, you need to be aware how it fits into your financial strategy. The reason so many people get fed up with not having enough money is they fail to put this simple concept into practice. Assets. There are really two types of assets. There are assets that are intrinsically worth something and, importantly, will continue to be worth something in the future. Ideally, your assets will increase in value over time. Your car doesn't count as an asset because it depreciates over time. So, while you can sell it, you will never get back the original money you invested into it. Assets of this type are long-term investments and can include savings, pensions, property, stocks and shares, a business or franchise, patents or intellectual property, art, antiques, jewellery, etc. The other type of asset is much more exciting because it regularly puts money back in your pocket, and there's usually a crossover between the two types of asset. Interest on savings, receiving pension payments, rent from a property, dividends from shares, royalty payments, these are all good examples. Another term for this type of additional income is passive income. The great thing about passive income is that it goes into your bank regardless of how much work you do or how much time you sacrifice. If you want to be financially free, which means no longer having to earn a salary from a job, then it's essential you build your passive income stream. Passive income is essential for long-term financial success and will be covered in greater depth in another video. The very simple rule to wealth is to control spending on liabilities and gradually increase your assets and passive income. Over time, the compounding effect of increasing your monthly income and in turn investing in more assets leads to an exponential increase in your potential wealth. This might seem like a long, slow process, and it can be, but steady, consistent growth over a long time is more powerful and guaranteed than any get-rich-quick scheme or any lottery ticket. What we've covered in this video is just the merest tiny introduction to building a long-term wealth strategy. Hit subscribe to keep up to date with future content, and if you like this video, please share it and take a look at the other videos in this channel.